see that on a macro chart basis, what is happening at this 21,100 level? On a macro chart basis, not an individual candle basis. Take the candles as a group of candles. It's all refreshed order book buying, isn't it? So we'd refreshed order book buying coming into this second phase of retesting in here, didn't it? So with that refreshed order book buying at a higher price, you're getting ready to join in now, surely. Don't call me Shirley. But we go from 2100 to 2180. And obviously you've had a very, very, very substantial profit on that buy side reversal there. So again, using the stuff you learned yesterday, recognizing the tweet that we sent out at a perfect time of the day, which was obviously at 158 before the bottom edge traded, allowed you to join in with that buying. It doesn't get any better than that, guys. It doesn't get any better. It's kind of good. It's kind of sexy. We like it a little bit. Now, some people might say to me, and possibly rightly so, I thought we got a really hot headline number. Yeah, we did get a really hot headline number, didn't we? But what did we not get? If you had to call today's non-farm payrolls in the same way as we call the oil, what was your trade call on this product, guys? What was your trade call? Now, obviously, you might say, but for what market? Well, obviously, that's a big question. For what market are we talking about? We're talking about equities. So what would your trade call for equities be in terms of your non-farm payrolls today? So what would you say the headline number is, guys? What would you say the headline is based on? The NFP print, right? Would you agree with the headline being based on the NFP print? And what would you say the detail is going to be based on? The wage impact, would you agree with that? So obviously, if we're looking at the headline print, then obviously we can look at this and say, well, what was the headline print? Well, we can quite clearly understand that the headline print was very hot indeed. So therefore, we would have this big sell, wouldn't we? Bearish. What was the wage? The wage was actually quite cold, wasn't it? So your trade plan is wait for the sale to conclude and then buy the dips or higher held bids, yes or no? So when I tweet out that the dealers are now buying the 50, 9 evens, right? When dealers are now buying the 59, attacking the 59 handle, And obviously we show you the buy trade that we took on NinjaTrader. Does it make sense that we got a BBOO trade response for the NFP? A BBOO trade response. So obviously that's what we're looking for. We're looking for that trade response, aren't we? We're looking to see if we get a BBOO trade response. And obviously what we're trying to do is take advantage of it. Now, what we need to be able to try and recognize is whether the dealers did show up, whether the dealers were visible for us to make that call off the 59 handle, right? Yes? So let's take a goose at that idea and see if we can actually spot that storyline as it unfolded in front of our very eyes. So a lot of people say, yeah, it's easy to see these things in hindsight, but we never seen these things in hindsight, did we? Because this tweet came out before the bottom edge actually took place that we bought into. I showed you the screenshot. So when we see the tweet, now obviously you can see it before the tweet even comes out, but obviously I've got to try and do trade first before I send tweets out and various other things. But you can see here's the tweet timing of the chart. What I saw at that stage was I saw the smart money was very, very bullish up here. You see that? Smart money was very, very bullish. You see all this selling delta being absorbed by the buyers that are coming in here. Well, what price is that? 59 evens, right? So you can actually see the narrative. The dealers are attacking the 59 handle, aren't they? Dealers are definitely attacking that 59 handle. In other words, they're lifting the offers up into the top edges here. So when the price runs the stops at the bottom edge here, it's a dead obvious buy trade, correct? Really obvious buy. Well, it should be a really obvious buy trade. So that's the trade we took, was the buy trade there. As soon as the price rejected off of that, and you obviously, you don't have to take my word for it because we showed you the screenshot of the buy trade that we started to work on, right? So there was a screenshot that we showed you as the buy trade started to work back down into this level for the first time, and then we just kept buying into this as a buy trade opportunity, right? But we don't know where this is going to go bid until it goes bid, Jack. We can't just jump into this like crazies, right? We've got to make sure that if we're going to catch a falling knife, we've got to have a story. Well, a wholesale price level is a big story, but is it enough to stop a non-farm payroll from dropping? Well, when we've got the BBOOs, and we love the BBOOs, so when we get a BBOO trade, we're obviously going to be looking at that discount and saying, I can make some real money off of that BBOO. And that's the trade we took. That's the trade we took when we tweeted out that the dealers were going to attack, or were already attacking. By the time I sent the tweet out, we'd already bought for the first time at 59s. My first original buy trade was in here. It was the first rejection of the low price there. So I had already bought here. We'd made some money. We scratched out here, and then we bought again here for this lift. That was a trade that we took live. And that's the trade you guys should have taken live as well, because this is the storyline that you were able to then read from the non-farm payroll print, which obviously we can again add to this idea of what the non-farms showed us was the BBOO outcome. So there's the BBOO outcome there, right? So there's the cells. Yeah. That's the headline NFP print. You can see that the numbers are very hot indeed, 212, but there is a downside revision to the other numbers. You see that? So it's not a big downside revision, but it is a downside revision. It went from a 227 to 212, and the other numbers went from 194 to 182. So there was a 12 drop on the other side of the book, right? So there is a downside revision, which isn't that significant, obviously, but that revision is still relatively bullish, so long as you've got a heavy discount, right? So that's revision's bullish. And then, of course, this 4% dropping down to 3.9% is the impact of those non-farm payrolls. So the non-farm payrolls not having an impact on earnings, that's a good sign for the Fed, isn't it? That means that they're getting a better level of employment, but it's not having a wage impact, which is the only part of this which is inflationary is going to be the wages, right? If you get a job, it's not inflationary. It's not inflationary in its own right. But obviously, if the amount of jobs start to create upside pressure on inflation, that's going to come in the form of higher wages because there's obviously massive demand for employment. But obviously, that little drop down to 3.9% is bullish equity. So we've actually got these two boos against the B. Now, obviously, if the price was quite high up, we might find that the balance is a little bit against us. But the price isn't quite high up. We just dropped by 50 full points on the S&P. That's a big drop for a market that shouldn't probably be dropping by that much. Now, coming into the cash open, it might start hitting some sellers again. They're all going to see that headline and they're all going to start panic selling it again. So we're going to have to be very careful into the cash open to make sure there is some support back off these levels if the cash open guys decide they want that short sell working for them. But up to that point, we've still had a very, very nice day. We've came in at 97s, 98s, 99s, and we're trading currently 16s. It's a very, very good $1,000 on the S&P, and it wasn't that difficult. You've already seen the buy response. You've then tapped it once, tapped it twice, and you've made some nice money. Well, you remember pre-COVID, 4%. The Fed's often talked about rates between 3.5% and 3.8%. So there's a little bit of wiggle room still in this 4.1%, isn't there? There is still a little bit of wiggle room. So it's not all disastrous. It's not all a bad news story, is it? So that's quite a good print for them, actually. That's quite a good print for the Fed today.